here's a few ways that you can invest in property and pay zero tax. So, first one I'm going to share with you is a Form 17 and a declaration of trust. What the hell are you talking about? I hear you cry. Now, what happens when you own a property if you've got a spouse and you jointly own a property is, generally speaking, the income is divided 50-50 between both of you. So let's say you are bringing in £20,000 a year from your rental properties and one of you is additional rate taxpayer, one of you is potentially not earning anything other than that income from rental property. You might want or find it more efficient to apportion that income in a different way, because one of you is going to be paying 45% on the income and one of you may not be, or 40%, 20%, it doesn't matter, you get the point. So if you want to do that, you would ordinarily do that by changing the share allocation or the way that that rent is apportioned out. And the way that you would do that is by submitting a declaration of trust, followed within 60 days by a Form 17. And I know that's not particularly sexy terminology, but in short, what that's doing is letting our HMRC know the way you're going to be allocating your income based on ownership proportions. So you could say, well, actually, 20% comes to me, 80% goes to you, so on and so forth. So that's the process. Of course, there's more to it. Make sure you get the correct support. As always, I'm giving you information. I want you to go and take that information and get the implementation carried out by professionals. And so this is a great way to save a fortune in tax if you and your partner are in different tax bands and jointly own property. Now, some people say, well, can I do it if I own the property? Can I still send that income to my partner? It's a complex one. Well, no, it's not really. The answer is yes, theoretically you can. The reality is that's likely going to come under scrutiny from HMRC. So you're going to need quite a robust reason for doing that, because you're likely to get queried if you do attempt to do that. So the simplest time when you're going to do this is when you both own the properties together and you just want to change the proportions that you're allocating to each particular individual. So that's one way you could potentially pay less, or in some circumstances, perhaps zero, depending on your thresholds, tax. The next one I've got for you is the rent a room relief. Now, this relief can get you up to £7,500 per year, totally tax-free. Since the first ever property that I bought as a youngster, what was that, 19 years ago now, I think. Now, since that first ever property, I always rented a room out, and there's a relief that you can claim when you're renting a room out, which means a lot of the time it's going to be tax-free. At the moment, that is £7,500. Very easy to claim. If you claim it, you can't offset other expenses. You can't claim the £7,500 tax-free and then go, and I also want to put through the cost of the bed or whatever else in relation to that room. It's a tick box and then you've claimed it, and other things you will have to bear. But in that scenario, provided, of course, the rent is £7,500 or less, you tick the box on your self-assessment form, super simple stuff, and you get that money. Now, that's going to save you, depending on your tax band. Let's say you're a 40% taxpayer and you're getting £7,500 a year in rent. That could be £3,000 as a tax bill that you've just saved us. So this is a great one. It's a great way to actually get extra income in if you've got space within your property. Now, it doesn't have to be a lodger. It could be that you're using a room in the house for Airbnb style accommodation or short-term lets, and that would still qualify provided it's actually a part of the house. Now, the rules do differ when it comes to things like annexes. If you've got a building that's separate to your building and you start letting it out as a Airbnb, you can't really claim that under the rent a room relief. However, if it's a part of your building, you've got a common entrance and so on and so forth, go to the HMRC website and double check under rent a room relief if you want to know some of the criteria, but then you can potentially claim this. If there's two of you, by the way, then it's split between the two people. You don't get two lots of 7,500. You can't have 15 grand worth of lodgers. It's split between you both. So provided you're in the same premises, obviously, £3,750 each. But that's £7,500 a year. Again, could be short-term lets, could be a lodger. Now, some people will be like, oh, I don't really want to take on a lodger. Do you know what? That's fine. But if you want the extra income, it's probably a lot more straightforward than you would think. And when you've got a lodger, the laws are very different than they are with a tenant. So it doesn't fall under the same laws. You don't have tenancy agreements with lodger. You have licenses and lodger agreements, provided you issue them with the correct agreement, which means if you do have an issue, you've got a lot more freedom and flexibility about getting somebody to move out of your property. They can't dig their heels in and refuse to pay. Once they're an issue, or once you decide you want them to move on, you can move them straight on. So I definitely recommend looking at this. A lot of people turn their nose up and don't want to do it, but actually there's benefits to having someone around the property. There's security benefits, there's cash flow benefits, there's tax benefits. And look, we're in a housing shortage. You're providing homes for people. It's a great thing to do. So that's number 2. That's another way you can pay absolutely zero on your property income. You're welcome in advance, by the way. Number 3 is to use pension contributions. Now, you can input pension contributions into your pension from your limited company if you're investing with a limited company, up to £60,000 per annum. It's a little bit trickier when you're in your personal name because there are limitations on what you can allocate from property. Remember, this is a property video, from property income, because it's not classed as earned income, it's classed as investment income, and there's limitations on how much. But I'm going to assume that all of you people on my channel are investing from a limited company per my advice, which means you can put up to 60 grand per year into your pension and pay zero tax on it. And even better than that, once it's in your pension, if you got it in a SIP or a SAS, beyond the scope of this video, we'll talk about it in other videos, you can then go and invest in more property from that freaking pension. So you can take your property money tax-free and go and buy another property money, and that income will be tax-free and will build you up for later in life. So you've actually got control of your pension and you're invested in property again. So it's a really, 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 really good thing to do. I tend to max out my pension contributions. You can also get a mortgage in your pension. You can buy specifically commercial property within the pension, but it's a really, really, really worthwhile thing to explore. If you're a high earner and you want to bring your tax bill down, then this is a great way to do it. And there are other ways you could potentially get at that cash. The big question I get is, well, but then I don't get the money till I'm 58 or whenever I can draw my pension. If you've got a SAS, for example, and you do end up with a big pot in your pension, let's say you got 500 grand sat in your pension, you can do things like a loan back where you loan up to 50% of the net value of the pension back to yourself, provided it's secured on a first charge and paid back within 5 years and some other criteria that you need to meet there. But in principle, you can actually borrow money back. So you could take money from your business, pay it into your pension, loan it back from your pension to your business and go and buy more property with it. Whereas if you just try and pull it out of your company, you're going to get absolutely rinsed for tax. You're going to be paying corporation tax, dividend tax. You're going to end up with half your money. You put it into your pension, you can loan back half the money, keep the other. You get the idea. So pension is another great way to pay zero tax on your property income. And then the last one is by employing family members. Now, you have to be mindful about how you do this. What you can't do is take your 10-year-old son and give him 100 grand a year salary. He'd probably be all right with it. HMRC, probably not so much. So what you can do is, let's say you've got your kids and they're of an age that's old enough to be working, you can start offering them a salary to help you with administrative tasks, provided you're actually paying them in line with the work that they're doing. You might pay your spouse, assuming that your spouse doesn't already have an income. If they've already got an income over certain tax thresholds, it might not be worthwhile, but you can start utilizing other family members and paying them in proportion with the work that they're carrying out. You've got to be sensible about it. Again, this one, definitely recommend getting tax advice and going to a property tax or a tax at least specialist. And most tax specialists should be able to deal with this one to make sure you're carrying it out in the correct way. But I just want to put it on your map. Remember, my job, give you the information, your job, go away and actually do the implementation on this stuff. So that's a great way as well, using family members to be tax efficient. But that's 4 ways that you can pay zero tax. Any more that you think I should add to this video, drop them in the comments. And if you don't really love paying tax, well, let's rephrase it. If you don't love paying too much tax, then I suggest you hit the like button, you hit the subscribe button, and while you're at it, you might as well hit the bell icon. And of course, you're welcome.